All right, guys, time for a weekly update. Unfortunately, I wasn't able to make a video last week because I was traveling, but we are back on track. And before we look at our positions, I would like to draw your attention to this McKinsey chart. And as you remember, we got manhandled basically by the OPEC a few weeks ago. Our glorious short position just got, well, destroyed. Well, not destroyed, but forcefully pushed against us simply by OPEC manipulating the market and capping the production. Um, but all is not lost, because have a look at this chart. As you can see, the blue here, the blue line above, from May, somewhere from around May, the price started to fall from 123 all the way down to 90. And this is where OPEC started to panic and capping the production. Um, However, there is a very interesting trend that we can see in this chart. Have a look here at the demand. Um, it is not growing. The demand for oil is pretty much flat. At the same time, you have this little line, and as you can see, that is the supply, and the supply is growing. And also, if you draw your attention down here below, you will see the global inventory stock, and it is getting bigger, which means, well, what does that mean? That means that people are not buying oil, they are storing oil, and if this trend continues, the price have to continue down. This, of course, is where the OPEC could again try to manipulate the market by capping the production, but we'll see. Biden is there and poking around and releasing more oil to the market, so it's a little war they have going on. Anyway, as you can see from the chart, McKinsey chart, it's the trend is with us. We are still in the short and we are going strong. Let's have a look at the charts. And here we have our Brent crude oil. This is where the OPEC manipulated the market, and we had this little bull run. And as you can see, the cloud said no, thank you. We're gonna push it down, and it did come down, and now it's starting to go sideways. Um, we are still not panicking in any way because, well, you just saw the McKinsey chart. I mean, the fundamentals are there with us. It's the world is going to, well, down the tubes, which means that less and less consumption of oil will occur in the future. So unless OPEC continues to manipulate the market, this will continue down. And this is a double position, so we are still well in the money, so it's not a problem. So it's going to be interesting to see how OPEC reacts in the couple of months, and I do expect this, however, to continue down. So I am sitting stable in this short position for oil, so it's not an issue for me. Anyway, with that said, let's have a look at uranium. And uranium is a long position. It is a very long position. And as you can see from this impulsive move and this retracement move, we plotted basically that the next impulsive move, which is this one, is going to be somewhere around here, and well, we are smack in the middle there. So if we get a reversal here down to the cloud where we have a plenty of support, I expect this reversal to be, well, somewhere around here, which means that basically if you are looking for a long position, and when it comes to uranium, I mean, we are talking very long position. We will be in this for at least a year or two, maybe 3 years. So if you want a position and you want to get in a little bit cheaper, well, this is the area to look for. If we get a retracement, so basically between 16 and a half and 15 and a half. Otherwise, we are continuing up here, and the first target for us is actually $20. So uranium looking good. Let's continue to copper, and if you have been following me, copper is also an um, ultra long position. It has been going basically sideways, slightly against us, but also, as we remember, we are not looking at the daily charts for copper. We are actually looking at the monthly chart, and we are smack in the middle for this retracement. We have a cloud that will act as support for us, and we have a pretty nice slowdown. Again, every bar here is 1 month, so don't expect this to happen quickly. So also copper position looking good, and this one is as well. I mean, expect to be in it for at least a year, two, maybe more. And finally, we have wheat, and that is, we're not going to look at the monthly chart. We are, of course, going to do the daily chart. Uh, let's see what is happening here. There we go. It is going slightly against us. We I was early in this one. Again, I took a position here, and was smack in the middle of a resistance cloud because I was expecting wheat to break through and build supportive cloud, which is, as you can see here, this is what's happening. We are slowly but surely building a supportive cloud, and this is how it looked when I took this trade. As you can see, we were just barely starting to going from resistance to support, and oh, let's just do this. There we go. And this is what happened. So we did have slight pullback. Let's measure this pullback and see if it is any trouble for us. And I don't believe that it is. There we go. The retracement for this impulsive move is also within reason. It is smack in the middle in our measurements. We are starting to build a supportive cloud. So this is looking fine. So we're just gonna give it a week or two more, see what happens. Now, if this continues to go down and then up and then down again, which means that we will get lower highs and lower lows, well, yes, then maybe I have to reconsider this position. But as it looks like right now, well, it's a good retracement. It's a normal retracement. It's a good position to maybe get in on this long action if you want to, but that's up to you, obviously. So overall, oil, well, we are working against the cartel, but the global market is on our side, so we're sticking to it. Uranium looking good. Copper, it's just too early to say anything because copper that is going to be a very slow play, extremely slow play. And one can say that the global market has to recover before we see any profits there, so it's going to take time. And wheat, well, we have a retracement, but that's still within reason, within our risk management. All right, guys. Hear from you soon again, hopefully. Cheers.